late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I want to talk about a topic that's been brought up in my Telegram group. So a lot of people are wondering kind of what my strategy is surrounding the altcoins going forward, kind of what I'm looking for in terms of confirmation, some potential coins that I do have my eye on, as well as the strategy that I'm going to use in terms of accumulating. So taking a look here, we're going to jump right over, we're going to take a look at the charts in a second here, but I just want to show you this. I will link the video here in the description and at the end as well, but essentially I covered this topic a little bit in terms of navigating the altcoin market, building a risk-adjusted portfolio. So I kind of talked a lot about here about the different kind of the different indices that I am watching. So here we're going to watch Bitcoin dominance, we're going to look at Ethereum Bitcoin, we're going to look at others dominance, and we're going to take a look at Total 3 to give us a good idea of what's going on in terms of the altcoin market specifically. And then here I did talk about valuing altcoins on their Bitcoin and Ethereum pairs as well as their US dollar pairs. I'm not going to get too far into that today because I still am waiting for the confirmation on the charts that I talk about, but I would definitely recommend, if you haven't, go look at this document, give it a quick read through, kind of see what I'm thinking of in terms of the strategies that I look for and how I'm going to diversify myself. So obviously, keep in mind that the risk tolerance is going to play a part in how you structure your portfolio, meaning if you have a higher risk tolerance, you're likely to invest in some of the riskier assets, hoping for that increased return. That being said, you do have to understand that with the higher risk return comes that potential for more downside if something goes wrong in the market. So we need to be aware of that. Just looking here, I'll get into kind of similar or some examples of coins that I am looking at in terms of their narratives. So pretty much I'm also going to just make a little note here. I always like to have some sort of cash position to lower my cost basis in a worst case scenario. So I've talked about that when we structure our portfolios, maintaining at least some percentage of cash, and then if things go wrong, you're able to really take advantage of those opportunities, lower your cost basis, and then you're not stuck there waiting. You wish you hadn't bought so much and that you saved more cash. So kind of right off the start, what you're going to do is figure out how much you actively want to invest and then how much you're going to have on the side to buy the dip in a worst case scenario. So this is just a rough example, kind of a medium risk. It's not a ton of cash. I like to have at least between 20 and 30% cash. Right now I'm about 50% just due to that de-risking I previously talked about. A lot of the warning signals that I pointed out at the beginning of the month, it's essentially played out, and we were able to save ourselves from enduring a lot of that downside. We booked profits, and now we're better set up to take advantage of the opportunities that come up in the future here. So that working exactly as we planned. Really great move there. Unfortunately, it does suck if you did get caught on the back end of the downside crash there, but we're going to continue going forward, watching the charts, seeing what makes the most sense going forward. So if you, for example, have $20,000 that you want to put into the market in terms of Ethereum and altcoins, looking at least a 25% reserve cash position. So you're going to spread 16,000 here amongst those plays, with 4,000 remaining just in case that things start to really break down. We go to those lower targets. You're then able to take advantage of it, lower your cost basis, and it allows you to actually be able to exit the trade sooner if we kind of get the signals that we need to de-risk, something like that. So just looking here, obviously how you weight your cash is going to change, and then how much capital you have that you're actively trading is going to also have an effect here. So anywhere from 20 to 30, 40% cash available to buy the dip in that worst case scenario, because nobody really knows what's going to happen in the market. A lot of the times we'll get really bad kind of macroeconomic news that just drags everything down. A lot of the times though, if it's news related, unless there's some substantial kind of fear or fundamentals that really should negatively affect markets for a longer duration of time, then lots of the times it kind of just recovers. The market digests that news, they price it in, and then they move forward and continue investing that way. So we aren't going to be scared, but we want to be able to take advantage of those opportunities. So just looking here, so when I look at altcoins, I think of them in terms of narratives. So each altcoin essentially falls into its own category. You have like utility altcoins, you've got meme coins, solutions. So utilities are what we're really going to be focusing on going forward. I think that's what is going to garnish a lot of the attention from some of these big players. So AI, RWA, and L1s, definitely three really hot topics here. We'll also consider layer 2s, scaling solutions on Ethereum. I don't have it in right here because I wasn't that bullish on Ethereum, but that being said, if Ethereum starts to look a little bit better, then it kind of brings up that bull case for the L2s to go on and outperform. But essentially here, looking at these, kind of weighting them in terms of risk. So lower risk for our L1s, we're looking at like a Solana or an Avalanche here. In terms of our medium risk, maybe looking at something like Near. I like Near because it kind of captures that AI narrative as well. AVAX captures that gaming narrative quite well, a little bit more than Solana, but Solana just has that retail trading narrative, so everybody kind of is flocking to Solana in terms of retail traders because of the very cheap fees. And then a higher risk one down here, just because it's newer, it hasn't survived multiple cycles, so Sui definitely I think has the opportunity to outperform a lot of the L1s, considering that it is newer. That being said, if the market were to dump out, we break down, then the new coins without all that price history are going to have struggles kind of holding their support. So obviously with the higher risk can come higher reward, but you need to recognize that risk and be prepared for it. Looking at the AI side of things, I'm looking at Fetch AI or Tau, BitTensor as my two potential top picks for the AI sector. You could also look at Render. Render is another one. It's a lot bigger in market cap as well, so kind of a little bit less reward, maybe a little bit less risk. I personally kind of like BitTensor and Fetch a little bit more than Render. Render had its kind of day in the sun. It has kind of bled a lot since then, so just moving on. We also see AIOZ here as kind of a medium risk, and something like Virtual could be a high risk. You know, it's really new. It had this crazy run up, but it has bled back quite a bit, so maybe presenting some opportunities there. In terms of RWA, or real world assets, so I've talked about that previously. The tokenization of stocks and ETFs could be coming in the future. We see Larry Fink from BlackRock really pushing for that. So I think Link is going to be a big one, Chainlink, Ondo Finance, and that's Mantra. They're going to be three of the bigger RWA players in my opinion. Definitely worth watching those three. And then in terms of memes, you know, I'm not going to get too crazy. I don't think people should be putting too much money into meme coins, but it can be fun. You know, we do recognize that they can really go on some crazy runs during typical mania phases. That being said, you know, where we are right now in the cycle, we might not get the same sort of mania phase that we have had in prior cycles. That's why I want to really focus on the utility, the fundamental side of things. Here, obviously, AI, we have that huge push for AI from traditional finance companies. RWA, with Larry Fink pushing for the tokenization of real-world assets, we've got a bit of a catalyst looking through there. And then memes, you know, you can't kind of ignore the factor of memes in crypto. That being said, as I mentioned, we're not going to weight a crazy amount of our portfolio in this. It's just too risky for me. I mean, if you love the memes and you want to go and buy as much as you want, I mean, that's entirely up to you at the end of the day. It's just not my strategy, and it's not something I'm really going to talk about too much here. But just looking at a few potential meme plays here, I'd be looking at Doge kind of as a lowest risk here. It's the oldest, it's got the most price history, survived the most cycles, and it's the most well known in terms of crypto. We've got Pepe next. Pepe is kind of arguably one of the most well-known internet memes in general, so I do think Pepe could perform well. Also, you could have Sheeb here, Shiba Inu, and then I just have this one Brett down here and Whiff. Those are two smaller coins. You know, I'm not really interested in them, to be honest. If I was getting into memes, I would be focusing on just a couple, maybe Doge and Pepe, focusing on those higher market caps, more notoriety, and yeah, going down from there. If we want to kind of weight our risk here, we weight majority of our money in the lower risk. So if you want to buy 3 different L1s to diversify kind of AVAX, then you have an L1 that captures that gaming narrative. You've got Near that captures that AI narrative. And you've got Sui kind of captures that US-based narrative. So I've talked about that before. I do expect there to be prioritization of US-based cryptocurrencies within the United States. They've kind of said that already. So just focus focusing on the kind of low to high risk, weighting more of your amount of capital to the lower risk. And then you see here, so 50% of our ideal allocated capital we're going to put into the lowest risk, maybe 30% and 20% kind of down for the other two. You're welcome to just adjust these percentages as you see fit. If you want to do 60 20 20 or 50 25 25, you know, there's really no one size fits all, because we all have different strategies, different risk tolerances. So we do see, if we were to invest kind of $2,000 into this, and then $1,200 into NEAR and $800 into SUI, that's essentially $4,000. So we've got our 16,000, right? Or we've got our 16,000 available to allocate to these different narratives, and 4,000 set aside for cash. So that's 4,000 right there in the L1s. And similar to here, so for AI, just picture it here, we've got Tau, FET, AIOZ, are three coming up to $4,000 as well. RWA, $4,000 between these three coins. And memes, you might weight memes way less, so I'm not going to kind of get into that too much. But just you kind of see how we just break it into narratives, and then we break it into risk, and then we also just factor in that cash position that we want to have, be able to take advantage of those opportunities. So you can kind of see here as you get down the board, just looking at the different allocations. Some of it has kind of changed. You know, I have updated a couple different things. You know, I'm not necessarily going to be acquiring all these alts myself. It's going to depend. I'm going to wait for confirmation on the charts. I want to see that the bottom is in, that we're likely to reverse trend to the upside, and then I'm going to look at all these individual altcoins and start looking at which ones might present the best buying opportunities. You know, I'm not married to anything. Anything that I have mentioned on this list is kind of interchangeable with your own choice of coins. It's just ones that I'm watching, ones that I've liked. So I'm going to watch them for now, but I'm not married to anything. I'm willing to switch them out as I see fit. I'm just looking for the best risk-adjusted opportunities in the space. So that's all we're going to look at right now, but this is a good little write-up. Kind of explains a lot of different things that I'm kind of looking for, different strategies. So if you haven't seen this before, I definitely recommend checking it out, see it for yourself, and you can kind of see my thoughts there. So we're going to flip over, take a look at the charts now, see what's going on, starting on Bitcoin dominance, because Bitcoin dominance kind of determines the fate of the altcoins and Ethereum here. So we're just looking, kind of trying to gauge where might be the cycle top. Essentially what we saw in the prior cycle here, I'll just pull this down. We had, once we put in our first bear market low here, and then we put in our next low over here, I took a trend-based Fibonacci extension from this low to this high to this low, and then that gave us this region up right through here. So the 1.618 and the 2.618 are often really common profit taking targets in terms of the trend-based Fibonacci extensions. So we see right through here, we kind of came up right into the middle of this zone right here is where we found that initial peak, you know, coming down, consolidating, getting another push up before ultimately breaking down into our bear market structure down here. So right down here we saw we still were in that downtrend. So we put in our first low, kind of reversed the trend a little bit. So I took my trend-based Fibonacci tool from here, this low to this high to this low down here, and we see right now price is within that 1.618 to the 2.618 Fibonacci zone right here. So we could, you know, it could play as resistance, you know, that could be a potential top. Even if we look at the 2.618, if it reaches all the way up there, it's still that lower macro high below this little wick up here. So it's just something we do want to pay attention to. Looking at our momentum indicators here, we are showing some bullish momentum on the weekly chart. We see the DMI positive line curling back up, supported above the ADX line. We see our RSI curling back up, and we see the MACD holding relatively well here. But so on the weekly front, we still could push up a little bit. We'll take a look at our lower time frames, look at all the different indicators on the different time frames, and see what might happen here. Looking at our daily, also bullish momentum on the daily. So if we see a bullish setup on the daily and we see kind of a bullish leaning setup on the weekly, that signals to me that we are going to likely just continue showing some more strength from dominance here. We'll see it is kind of just consolidating in this box through here, and then just taking a look at the really low time frame here, the hourly. So I want to show you, essentially we have a target here. This is that uptrend structure that I talk about on the low time frame. So we see higher highs, higher lows, looking like we might be coming into a bit of a bearish cross here, as well as the RSI, and losing some momentum on the DMI here. But that being said, as long as this support here at 61% holds on the low time frame, then we are still just in this uptrend structure. I'm looking at resistance here up kind of towards 62%. That's based off of this Fibonacci resistance here, so I'll show you that quickly. If we take a Fibonacci retracement from our swing high to our low down here, you see 618 and 786 often acting as resistance, and you see that this range we've been chopping in, the top of it kind of also acting as resistance. So just something to watch. We could come into resistance there. It might offer that kind of lower macro high and then hopefully start to break down and allow our altcoins to really go on and outperform. But for now, dominance is looking strong, and the reason dominance is looking strong is because Ethereum and the altcoins are kind of looking weak. So alternatively to Bitcoin, Ethereum is just in that continued downtrend price action. We do see that we kind of have a bit of a bullish cross coming up here on the MACD. The RSI did kind of lose some steam on the low time frame, so we need to see it do a little bit more work. We're still putting in lower highs, lower lows, so this is not actionable in my opinion right now. We're still kind of bleeding. Maybe we come back to our 786 Fibonacci where it acts as support before we can base that, put in those higher highs, higher lows, try to reverse trend to the upside. For now, still bearish momentum on the DMI, so flipping over, we'll take a look at some of the higher time frames, see if we can't get a better idea of what's going on. So this is kind of similar to what I just showed you. This is the same price action pattern but on the high time frame. So you see downtrend price action, lower lows, lower highs, consolidating in this bear flag, and we just broke below it. So now we just need to hold either these lows down here, so watching that anywhere from kind of 0.237 up to, you know, the 786 here, 0.247, something like that. We've also got quite a bit of support all the way dating back over here. So we can see, if we look at our chart, we see lots of support and lots of resistance up here. We're much closer to the chart lows than we are to the highs. That's why you could argue as a hedge trade, you could be entering here kind of dollar cost averaging into Ethereum from Bitcoin. Assuming that we are able to get that other leg up. The reason I'm waiting for confirmation is because the weakness that I see in the markets, I'm kind of seeing it in the SPY, Bitcoin and Ethereum. So if things really start to break down due to kind of escalation of macroeconomic tensions, geopolitical tensions, then we could just risk breaking down even further. That's why I wait for confirmation. I would rather be on the right side of an uptrend than the wrong side of a downtrend. So it sucks, you know, you're not going to perfectly time the bottom, but I'm trying to point out to you guys, you don't need to time the bottom to make really good returns. You just need to time the trends, position yourselves near the bottom of the trends, and get yourself out when the warning signals start to flash. So looking at Ethereum, Bitcoin here on the daily chart, you know, still holding above this macro support here, but not enough price action, not convincing enough for me to take any sort of position. Looking here, we're kind of seeing the MACD curl back over, lose momentum, RSI losing momentum, and we also see a bearish setup on our DMI. We don't want to see that line getting above there, so bearish setup on Ethereum, bullish setup on Bitcoin dominance. Doesn't look bottomed, still needs more work to do. We're not rushing into anything here. Flipping over to Total 3. Total 3 is looking a little bit better than Ethereum. It's kind of still in that temporary downtrend structure on the low time frame, but we are holding kind of this key horizontal support level through here. There is probably some confluence with the Fibonacci retracement zone through here. So yeah, right at that 618, kind of coming down into the 786 potential. We see our 200-day moving average curling up. That being said, we do start to see the moving averages converge against each other. That's similar to what we saw in Bitcoin here. I showed you Bitcoin. We saw these moving averages really start to curl towards each other and price wick down. So just, similar price action that I'm seeing here across the alts as well. We do want to see a better, kind of more momentum here. We want to see that DMI plus line continue to converge with the orange line. And we want to see that RSI start to curl back up, as well as the MACD start to curl back up. But kind of does show that it's running out of a bit of selling pressure here. Decent little buying volume in here as well, but I'm kind of just wondering if this might just be like a bounce to a lower high. So we do have a kind of a trend line through here, and we also have Fibonacci resistance of right here at that 786. So we could see that bounce up here, another lower high, and even continue to break down. But that's kind of the play we're looking for. If we can get even on that trend, and how I showed you where we open a position and we start using stop losses to protect that position as price climbs up, then we can really capitalize on that move. So still watching it, we want to see higher lows, higher highs here. We can flip to the 4-hour time frame, try to get a better idea, see what's going on in the very low time frame. So we see pretty much where that downtrend price action started to kind of change structure, losing a little bit of momentum on the RSI and MACD. We do see that little convergence here, but again, we're looking for that bullish cross of the DMI. We want to see these lows hold through here, and then ideally keep continuing up. If we can take out these highs and then again print higher lows, that's going to start looking better on the 4-hour, but it's still going to need to do a bit more work on the kind of 4-hour to get that translation to the daily chart. So if you flip to the daily chart, essentially all we see here is lower lows and lower highs currently, and then we flip to the lower time frame, you start to see a little bit more price structure. So we've actually kind of taken out this low rate here, so we need another higher high, higher low for that confirmation. Eventually, if it maintains this structure on the low time frame, it's going to translate to the higher time frame, which is where we're looking for confirmation. But for now, my thoughts, wait for that confirmation, and then continuing on, we'll take a look at others' dominance really quick here. Also looking a little bit better than Ethereum Bitcoin in my opinion. It was able to take out these highs right through here, so a lot of resistance all through here. You can see pretty historical resistance, now hopefully support, but we need to see some strength here. So a little indecisive here with the DMI. Can't really see what's going on. If we zoom in, we want to continue to see that orange line come back down and the blue line curl up, show that bullish momentum. RSI, kind of neutral, and MACD a little bit above neutral, but could offer a decent potential to continue bouncing up. This is a bit of a bull flag structure as well. So if we break out of it, we could even break out and take out this trend line right through here. That's going to be the most ideal move. If we do take a bars pattern, I'll show you that as well. Kind of just a bull flag measured move. So we take the flagpole of the bull flag, and then say we broke out of the bull flag, then you drag your bars tool or your measured move to that breakout point, but it's not confirmed until we've actually broken out and back tested it. So we need to see something like this play out where we have our bull flag here. We're just consolidating right now, but if we start to see a breakout here and a back test that's supported by our momentum indicators, we might be looking at this as our measured move here to that potential resistance of the next bull flag. That's going to look really good. It puts us right up in between the 50 and the 200 day, and ideally we want to start to see this 50-day moving average curling back up. We want it to get above the 200-day moving average right here and hold it as support for us to get another leg up in this market. So watching something like this, if we see Total 3 really break out of this little low time frame bull flag, come back test it, be supported by our momentum indicators, I might look at taking a bit of a swing position here, looking at entering kind of right here, stop loss beneath support of the bull flag, and profit taking target of the measured move on that bull flag. So just something to pay attention to as a potential. We could look at a swing trade, but we do want to wait for that high time frame confirmation before I start getting into spot trades. So When I talk about swing versus spot trades, swing trades essentially treat they're a lot shorter time frame, they're higher risk. I'm not necessarily waiting for confirmation on the high time frame. So sometimes low time frame confirmation is enough for me to take a swing trade, which is why they're a little bit riskier because it can always break down. Whereas a spot kind of accumulation, I'm looking at that confirmation on the daily to weekly charts, and I'm going to be entering, bigger buys and kind of higher. It's lower risk essentially because we do have that confirmation, but it's going to be a little bit less reward. That being said, my buys are going to be quite a bit bigger than what my swing positions are. With swing positions, I'm only risking a certain amount per trade, just because if things go the opposite way, we all know how volatile these markets are. Things can move like crazy. You don't want to get caught in the wrong side of a trade, risking too much in terms of a swing position. So that's kind of my thoughts going forward in terms of the market here. So just to recap, Bitcoin dominance still looking strong, Ethereum, Bitcoin looking weak, Total 3 and others dominance showing a little bit more relative strength, but would like to see it continue to show itself, continue to confirm at least on the low time frame, and we'll continue watching it until we hopefully get that confirmation on the higher time frame that we're looking for, and we can really start to get more aggressive on our positions. So if you like the content, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.